In this SMC Outlook, I'm sharing my exact trade plan for the DXY, the Euro, the Pound, the Australian dollar, and also gold for the week ending January 23rd, 2026. So if we haven't met yet, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So looking here first at the DXY, let's start here because I love to use this chart as my barometer for the rest of the market. Because if you can nail this chart, then you can pretty much navigate the rest of the forex market. And what we talked about in last week's video was the fact that we had this 1 hour change of character back here. Okay, so going back here to late December into early January, what we had was a very clean and obvious BOS down here. So break of structure below the low. Then this up here was our external high or protected high because we also had the market sweeping internal liquidity. So this was ideal. This is exactly what you want to see from a market where you get the BOS down here in this area, making this your external high. That means that any close above here confirms a change of character. Now, where a lot of traders go wrong is they look at this here and they think that this isn't enough. They're looking for some massive displacement above here. And all you need is this. All you need is this right here. This is your acceptance above that level. And from there, we were looking for buys only. And sure enough, you can see that we had a low right here, right off the lows, and uptrend since then. Now, I also want to point out that I'm going to show you a couple of patterns here that the market tends to do this over and over again. So you'll note that we have this low right here. The market swept that low. Okay, we took out stops. We had acceptance above the highs. This right here is a perfect bottoming pattern. And you will see this over and over again. You can even see the top up here, right? Notice the high up here. We swept the high. We closed below. Okay. So you'll notice this over and over again in the market. The more you pay attention to it, but the key is context. You don't want to just go hunting for this pattern because what you're going to end up doing is you're going to be forcing trades. It has to be in the context of the overall market direction, directional bias, the trend, etc. So you have to be buying things like this with the large buyers and selling with the large sellers. So if we move over here, the reason I wanted to show you that is that in the VIP group last week in Discord, we caught a couple of bottoms here on the DXY. And I'm not showing you this for clout or to flex. This is just to show you exactly what I did. So here we can see that the DXY on the 15-minute time frame, we had this low right back here. We swept the low. We had the close above. So this right here is the exact same pattern. And this ended up being the bottom for the US dollar last week. Now, the important part here, though, is that this didn't happen in isolation. Okay, this wasn't just some random pattern in the middle of nowhere. It actually occurred right back here, right off of these highs. So this was that low we just looked at here on the 4 hour time frame. That's the low that we just pointed out, that I just pointed out on the 15-minute time frame. Now, this was the other low right back here that I also caught last week. And again, this was all announced in real time in Discord. But you can see that this right here, okay, is the second low. So this over here was our first low. This over here was our second. Now this is a little bit different in the sense that we got to close below here. Okay, so we got to close below, making this a BOS change of character. And that ended up being a really nice low for the dollar as well. Now this one too, though, you'll notice that on the hourly time frame, okay, if I move out here, you can see that this low right here, okay, so this was the first low. This was the second one. This one too occurred at a key area. Notice the highs and lows through here. We had a lot of consolidation through here, making this a key pivot for the DXY. So going into next week, what are we looking at here? Well, we have a new BOS above these highs, okay, here on Thursday. So on the hourly time frame, we did close above this high back here. Okay, so high, external low down here. We moved up, we took this out. So BOS here. Now, whether or not we get a pullback from here, okay, is going to kind of dictate what we get next week in terms of setups. Because you can make the case that from this low right down here, up here to these highs, you can see that the OTE is way down here. Now, the one issue with this, okay, is that first of all, we have this low here. The second issue I have with this is that, as you guys know, I do use a channel. And I know that there's a lot of people out there who throw shade on using diagonals in the market. And especially if you're trading SMC. I've honestly found over the years to have tremendous success with diagonals and specifically channels. Okay, so I use something that I call a distribution channel. I've talked about this before. I've made videos on this before. But you'll notice that off of these lows right here, first of all, you can see, I mean, that's clearly a trend line, but that's not really what this is about. What this is about is telling you that the market right now is, if we drag this out, you can see where this is the distribution that's happening. And by distribution, I mean that if you imagine a midpoint through this trend, okay, since the year started, you basically have the DXY distributing to the sell side and you have it distributing to the buy side. Now, the issue that I have with looking for OTE down here next week is that if we get acceptance below here, okay, real acceptance below this, then do I really want to be buying down here? And the answer is no, because in my experience, when you get acceptance below a distribution channel like this, oftentimes that is at least a sign of a short-term reversal. And we saw the exact same thing happen back here. I talked about this at the time, but you can see that off of these highs here, okay, for the DXY, this right here, the acceptance above this area, right back here, and again, we talked about this in real time, this right here was my indication before the change of character ever happened that this right here could be a bottom for the DXY. So my point here is that even though right now, when we look at the hourly time frame, even though we have, potentially from this external low down here up here to this high, even though OTE is sitting down here, I'm not necessarily looking for the move down here to buy. I think that we could see something a little more shallow from the DXY next week if it's going to stay bullish down here into this candle. Okay, so right now we have still this pocket right down here in this region. Okay, so off this high down here, there is still a fair value gap right down here. And if we look at a 15-minute time frame, you can see that it's even extending a little bit lower down here toward this area. So in my opinion, if we are going to stay bullish here on the dollar, then we really shouldn't see anything below this area through here. If we start to violate this low and get acceptance below that channel I just showed you, then I do think that could be early warning signs for a reversal. Okay, so not my base case, but if this trend is going to stay bullish again, this is where I'm looking for low time frame change of character for a push into that 4-hour FVG up there around 99.67. Okay, so we'll see what we get. It's all going to come down to what we get down here in this area. In my opinion, early next week, we should see this. If it's going to test, probably Monday or Tuesday next week. And we'll see what we get from here. If we see acceptance below here, that could be bearish. But if we get a change of character from here to push back to the highs, of course, that would be bullish and a continuation of this trend. So one thing to be aware of too, before we go on is, and I talked about this before, but you could make the case that going back here and moving all the way back here to these highs and lows on this trend, this uptrend in late 2025, you could make the case that we technically have an external low here and we actually violated this back here. So this could be a change of character. In other words, the point here is that this entire move that we've seen up here in January, this potentially could be just a retrace following this bearish change of character off of this low. So it is something I want to point out just to, keep in the back of your mind when you're looking at this trend, that if we were to get acceptance below here, whether it be next week or sometime later in January, that this could just be relief, before moving back here towards some imbalances before we potentially get a rotation lower. Okay. So just keep that in the back of your mind as you move into next week. Okay. So looking next at the euro, you can see a nice downtrend here, lower highs and lower lows. And this distribution channel that I talked about, I made a YouTube short on this last week. And what I said there was that we had equal highs on the 15-minute right through here. Okay. So if I move in, you can see it's a little hard to see on the hourly, but there were a lot of 15-minute equal highs right through here. And we had an imbalance in this region. So the short that I made, the market was down here. It hadn't even come up here yet. And I was looking for a move into this area to sweep those equal highs and then potentially get a turn lower from the top of that distribution channel. And that's exactly what we got. So really nice setup there, called it to the T. And then from that point, it's just been lower highs and lower lows. Now, in terms of where this market could be going though, right? Like what could this market be targeting right now? And in my opinion, if we are going to get the push lower next week, then what I'm looking at is, first of all, you can see these two candles right here. So on this low right here, you can see that we have essentially this pocket right down here. And then we also have another one, okay, directly below that. So this area right down here, right below the low. Okay, so if we draw this out now, just drag this all the way over here, then this is essentially kind of what I'm looking at for the euro, where it could find some support next week. Okay, now it is kind of sitting close to the bottom of this distribution channel, okay, but not quite there. So this is going to be the first area to watch next week, and then this one down here in terms of where the market could find some support. But early on though, just like the DXY, since this is essentially the inverse of the DXY, what I'm looking at early next week is going to be a move into this candle. You can see it here on the 15. We've got this massive pocket right here. So you can clearly see through here, this candle, we still have this imbalance up here in this region, right around 116.15. And then we also have here on the 15-minute time frame as well, you can see we have an order block up here. So this right here is your order block. And then we also have, again, this FEG, through here. So if we do wick up here in this area early next week, that could be, potentially a shortened opportunity for the euro if we get a lower time frame change of character. Okay, so, as always, obviously not financial advice, but that is what I'll be looking for next week from the euro. But right now, downtrend is intact. There's no reason to be bullish here. Same thing with the DXY. There's no reason to be bearish on the US dollar until we see a different look. Okay, and really the different look I'm referring to, if you look at this here, really for the euro, it's bearish until or unless we get above this high. This is now the external high or protected high up here. So as long as we're below this, then this trend is technically still bearish. Okay, so looking at the pound now, also really clean, mostly sideways last week, but you can see that at the start of last week, we did get a confirmed change of character down here. So this was the very start of last week. And as soon as we got this, I was looking for shorts only. Now, the area that I was looking for specifically, and I mentioned this in last week's video, and you can see too, that this is the kind of the power of distribution channels. And this is why, look, again, people throw shade on using diagonals and trading, but in my experience, they can be incredibly useful. And when you anchor this to these highs up here, right, what you have here is you have this distribution that's occurring. Okay, now the market gave us acceptance below here. Notice what it came up and tested. But specifically, what I want to show you, the reason that the market came up here, okay, is liquidity. It's not testing a level. It's not retesting a level. It never is. It's always about liquidity. And you see here, these two 4-hour candles, this one right here and this one, you had this imbalance up here. And this is exactly what we saw the pound tap into. And then from here, what you'll notice is the exact same pattern. So on the hourly time frame, you can see that we had this high right back here. And again, once you train your eye to see this, you're going to find that this happens over and over again. But the key is context. It's not just a matter of going out there and hunting for this and trying to find this pattern. If you are trying to find this pattern, then it means you're not looking at context first. Okay, so if you find this pattern though, and it lines up with areas like this back here, this imbalance, then this is textbook because you have the high, the market swept the high, took out those stops, and then we had acceptance below. Now, notice what we also got here on this acceptance below. We had another imbalance, another void in the market form right back here. Notice what we tapped into. And I actually called this in Discord I was off by 1 pip here on a 15-minute FEG through here. There was a line right through here, right off of a low on the 15-minute time frame. And we got the market actually coming up here within 1 pip of that and then reversing. So you can also see too that if you were trying to confirm this on the low time frames, you had a nice little shift here where you had higher highs and higher lows. And then on the 5-minute time frame, the shift occurred right here. So you could have been shorting through here with a stop loss above the highs, and that would have been a really nice trade. Okay, so really simple stuff. And the market does this over and over again. And now you can see here too, we had these imbalances back here. The market tapped right into that. Now, full disclosure though, we still have this area right back here where we could see it snap into this region next week, because you can still see that off of these lows back here, right? We do have still an imbalance up here above this high. So I wouldn't be surprised to see this high taken out and then potentially from there sellers step in. So we'll have to wait and see. But right now, just like the euro though, this is a bearish trend. We've had the change of character at the start of last week, and now we've had a confirmed BOS2 below that low. Okay. So also just like the euro, the external low here, the protected high, or I'm sorry, external high is going to be this one up here. So technically we are bearish on the pound as long as we're below this high up here. Okay, so next up, I'll just touch on the Australian dollar. I'm not going to cover it too much because I talked about this last week and really nothing has changed. Although I will say that the New Zealand dollar has given us a bearish change of character. So I do think it's only a matter of time before we see the Australian dollar take this out. At which time though, then we get a bearish change of character off of this low, and then we're looking for shorts from here. But the Australian dollar has once again kind of gone into this, sideways mode, this chop mode that we saw for just months and months back here. So hopefully this is not a sign that we're looking at this again here for the Australian dollar. Hopefully we get some nice swings like we have had for the past few months, but we'll have to wait and see. Now for gold, this should also be pretty quick here because obviously, bullish trend, right? Break of structure last week above the high. However, if you treat this as an external low, then what we could potentially see from XAUUSD is potentially a move down here into this low. Just because you can see that we do have some imbalances. The first one being this pocket down here, and the second one being this one down here. So potentially a pullback here from gold. And that's also true if the US dollar were to continue its uptrend, although so far it really hasn't mattered much for gold. I mean, it's been really, really strong up here. But I mean, bottom line is this is a bullish market and I'm only looking to buy here on pullbacks. So if we were to get something down here in this region, followed by a lower time frame change of character to the upside, then I'd be targeting the highs. If of course we drop down here, we don't show this, and we do drop down here toward this low, potentially filling in some of these imbalances down here, then I'll do the same thing here, right? Imbalances here, looking for the buy. So I'm only looking for buys here, given what we're seeing here with these breakup structures, looking really strong here from gold. But I would have to see that pullback though in order to get long. And really, at a minimum, you're talking about from external high to low down here. I mean, really, if your 50% is through here, then I have to see the market get down here if I'm going to buy this market. All right, so I hope that that's helped. If it has, be sure to subscribe to the channel and also check out the link in the description of this video for a free SMC strategy course that I just launched this weekend. So it's going to be 3 days of value-packed content that's going to show you exactly how I trade full time. All right, have a great rest of the weekend, and I will talk to you again next week.